Okie dokie. Okie dokie, everyone. Thank you so much for joining me tonight. So can I start off by saying either a very good morning or a very good afternoon or even a very good evening or good night, depending, of course, on where you are around the world. Thank you for joining me tonight on tonight's latest episode of How I Got to Grips with Trading. Tonight's episode is, of course, called How I Got to Grips with Different Trading Styles, written by myself, which is obviously James Trescothick, and I'm the Chief Trading Educator here at Stratton Markets. Now, before we get on to an introduction on myself and tonight's agenda, of course, I'm talking about online trading and CFD trading. And like with every type of investment, it does indeed carry a great deal of risk. So I do suggest you do your own due diligence and your own research and know of the risks at hand before entering any trade. Now, with that out the way, this hairy, plump-berry, wrinkly individual is myself, yours truly. Like I said, my name is James Trescothick, and I am the Chief Trading Educator here at Stratton Markets. I have over 20 years experience in the financial service industry. I actually started off in mortgages when I was the ripe old age of 18. I am now 40, not 50, like some people say. So I started off in mortgages, and I actually specialized in commercial mortgages, buy-to-let mortgages. And then I moved into pensions and alternative investments like unit trusts, etc. And I got involved really with online trading and trading in general around about 12 to 13 years ago. I've traded myself, obviously, for a number of product companies in Dubai. I also ran a floor at the Philippine Stock Exchange before moving into really sort of portfolio management and then going down the lines of education. I'm indeed a published writer. I'm pleased to say I've been published in several leading industry publications, including the likes of the Financial Times Advisor, quoted numerous of times in Market Watch, which is obviously the offspring of the Wall Street Journal. I've been quoted and written stuff for The Street, which is Jim Cramer's media and website, as well as several newspapers like City AM and several magazines in the industry. And I've often been asked for my opinion or my comment on what I see going on in the market, which leads me on to the next part about myself, whereas I am a very avid market commentator. I'm very passionate about this marketplace, very passionate about trading. So I do talk about the market or commentate about the market a lot. Oops, wrong button there. And as well as that, I'm also a well-known public speaker, and I've spoken at several industry events around the world, including the likes of Dubai, Qatar, Kuwait, Philippines, South Africa, more recently Joburg, Pretoria, and Cape Town, London, of course, Berlin, just to name just a few. Now, before we get onto the agenda, something I will tell you a little bit about myself. Like I say, I'm in education. Part of my job is education. Obviously, I still comment about the market, but the approach I take when it comes to education with CFD trading, I never ever refer to myself as an expert, because I personally don't believe nobody is really, unless you're Warren Buffett, of course, no one really is an expert when it comes to education and trading. Okay, so what I try and do with my sessions is I try and break it down to sort of simple, basic terms, share sort of my experience and my fall downs and my understanding, with the idea that you can take what I give you away with you, and then you can then form your own sort of foundation for education, and really to see at the same time if this trading arena is right for you. How long will the session take? Good evening, by the way. I've got a question here. How long will the session take? Good evening to you, by the way. About 25 minutes. Don't worry, it's not very long. Okay, etc. So actually, on that point, I said my point. Let me move on with it then. Good question. Only about 25 minutes, my friend, and welcome and thank you for joining me tonight. Okay, tonight's agenda. Like I say, this is the latest episode of a series of webinars I've been running called How I. And this one is called about how I got to grips with different trading styles. So tonight's agenda, of course, because we're talking about trading styles, we'll have a little talk about the trading sessions first. Okay, great. Different trading sessions first as well. Okay, and then we will go into about unique different trading styles, which are really, what's out there. Then we'll talk about identifying a style which possibly fits your needs. Then we'll talk about other episodes coming up this month. And of course, as always, I'll do my question and answer session at the end. So if you have any questions related to the topic I'm talking about, please hold back till the end. So, right, this is, okay, if you've been an online trader before, first of all, let me put myself on camera so you get to see my ugly face. Hello, everybody. Right, okay, so as I was saying, okay, we all know that trading, or the FX trading in particular, is 24 hours a day. It starts at 6 a.m. Sydney on Monday and closes at 5 p.m. New York time on a Friday. Okay, so it does literally mean this market, I'm talking about currencies, this is stocks, obviously is different, is really operating. Absolutely, yes, you can indeed ask me any questions at the end. Please do. Please do. Any questions? The question and answer session, yes, you can. Ask me as many questions as you like. And if I know the answer, I will share it with you. Good question, though. As we know, it's like I say, it's 24 hours a day. And of course, the world is not awake or open or wide awake 24 hours a day. So this means it's split into sessions. The first session is the Asian session, Sydney and Tokyo. Okay. Now this session opens at 6 a.m. Sydney time and closes around about 5 p.m. Sydney time. So it's 11 p.m. to 8 a.m. GMT. Now, this is a smaller session in terms of trading volumes because, like I say, it's one of the smaller minnows in the market. So we're looking at cities like Sydney, Tokyo, and Singapore, etc., which are trading around these times. Currencies that are most liquid, as in the people who retains most of the attention around this period, is, of course, the likes of the Aussie dollar, New Zealand, Japanese yen, which does, of course, make perfect sense because those are the countries which are wide awake at that time. Doesn't mean, of course, the likes of the euro or the British pound aren't active. They are, but I say the Aussie, the New Zealand, and Japanese yen tend to get quite a fair bit of attention. Now, the next session, okay, and this is the big boy. This is the big session, okay? So when the traders put their big boy pants on, this is the European session, i.e. realistically, really London, okay? Now, London opens at 8 a.m. GMT and closes about 4 p.m. GMT. It's the biggest trading session and makes up nearly 50% of total trading volumes, and it's extremely liquid. Where it will remain like that after March next year with a brick exit, who knows? But for the time being, it is the biggest trading session and London is the big boy, okay? So as well as London, other countries or nations or capitals, shall I say, which are active during this time is the likes of Paris, Frankfurt, and Zurich. Now, of course, because it's Europe, the main currencies which come under a lot of attention, i.e. with the fundamental analysis and economic data coming out at this time, includes the likes of the euro, the British pound, and obviously the Swiss franc. This leads on to the next session, okay, which is the last session of the 24-hour day, which is the North American session, i.e. New York. Now, this opens around about 8 a.m. and closes at 5 p.m. In GMT, around about 1 p.m. GMT to 10 p.m. GMT. This is the second biggest trading session in volume, so it is, again, highly liquid. This obviously involves countries, well, cities like New York, Chicago, and Toronto of Canada. Currencies to watch include the US dollar and the Canadian dollar, because this is obviously the economic data is coming out involving those pairs. And here's the thing, when this session opens, it crosses over with the European session. So what you tend to find is you tend to have the two biggest sessions trading at the same time, which can cause a lot of volatility. What this overall means, though, is when Europe starts to close and the last couple of hours of the New York session, liquidity starts to slow down before obviously New York closes and obviously Australia opens again. Now, the reason why I go through these sessions, and I've added this into part of trading styles that fits your needs, is because, again, like I said, the market's 24 hours a day. So you need to be aware that despite what you do for a full-time job, etc., there is always possibly an opportunity in the market for you to watch and monitor. Okay, because obviously it's 24 hours a day. So this is why we talk about the sessions when it comes to trading styles, because some people, some individuals I've dealt with and I work with, they may be living in the UK, but they don't trade the European session. They wait for the Asian session and they watch the likes of the Australian dollar. Again, I talk about these sessions is so that you can identify what is, possibly could fit your needs, etc. So this moves me on to this, and this is again is another thing which people need to bear in mind is about their character and their personality. Okay, how risk averse they are. Now, to go and show the liquidity, this is the average pip movement per trading session. Okay, of some of the major currency pairs. Okay, so we have the likes of the euro dollar in New York. The average pip movement, okay, it's around about 92 pips. Tokyo, the Asian session, 76. But again, as you can see in London, is 114. The British pound, US dollar, the cable, New York, around about 99, Tokyo, 92, but the movement during the European session is 127, okay? The dollar yen, 59 during New York, 51 in Tokyo, but 66 in London, okay? Now, the reason why I go through this chart, again, is to sort of help you recognize and ask yourself this question: what's your attitude to risk? Am I risk averse, or do I have a large risk appetite? If you have a large risk appetite, then of course you might want to start looking sort of like pairs which look the high volatility, the high pip movements, and look at the same time the trading sessions which they're more volatile in. If you're less risk appetite or more risk averse, then maybe you want to look at some of the other pairs which aren't so volatile, and at maybe the sessions when they're slightly quieter. Again, this depends on your personal nature. Again, when we discuss this is to say, if you're into high volatility, then obviously you look at the volatile pairs like the British pound, US dollar, and things like this. If you're not, you look at some of the slightly quieter pairs like the dollar yen and the dollar Swiss franc, to name just the two. Again, though, I will iterate, at the end of the day, there is volatility in all currency pairs. So no matter what's happened the day before, doesn't mean it will happen the following day, of course. So there is always a great deal of volatility in anything. It's just some pairs are a lot more volatile than others, and certainly more volatile in certain trading sessions. So let's move on to trading styles. If you don't mind, quick sip of my coffee. Excuse me. So, trading styles, realistically, and this is the crunch of the matter, trading styles should be unique to you. Okay? I can ask you that question. Yes, I can indeed. It's a very good question. This other question: can you recommend me a Forex education training or class, and how many did you follow yourself? Very good. I will answer that question as I hope I pronounced it correctly at the end. But that's a very good question. Thank you. I will address that question. So, like I say, let's face it. We all have our own unique personalities, and at the same time, we all have our many different emotions. We're very, depending, we're not all the same emotions, and we will have different emotions that drive us. And at the end of the day, we will have our different goals. Now, when I ever say that, people say that's stupid, James, because obviously the goal of every trader in this industry is to make money. And the answer to that, no, it's not actually. Some people, in my opinion, again, it's down to whatever they believe. Some people go into the market and trade not to make money, but for the thrill of it and for the excitement of it. Now, their idea is a bit of escapism. Others look at trying to make steady income. Others do it for a bit of fun, but maybe a little tiny income. So again, we all have our own different independent goals. It's not all about making money. Hopefully the majority of us is sensible enough and think that what we go into, that's the idea of doing that. Realistically, really, again, this is not advice, this is just stating something. Your goal's got to be, if you go into this, is not to lose all your money. That's your first goal. But anyway, I'm digressing. Okay, so yeah, we will have our own different emotions which drive us and independent goals. As well as that, our lifestyles are different, and our jobs and our hours we work are also different. So when we read certain books or do certain programs about what works for somebody else, we try and fit that trading style into our lives. If it doesn't fit our life or our personality, it's not going to work. So realistically, finding a trading style which really suits you and fits you is about identifying who you are and what fits in with your lifestyle and your life. You know, that's the crunch of the matter. It's a case of digging deep and understanding more about yourself to try and get this to work for you. You know, so this is why we need to understand. Oops, understand. Click the button again. Understand our weaknesses as well as our strengths. Let me see if I can take myself out. Okay. Now, I'm going to go over some of the crunch of some of the different trading styles. Okay. Now, you know, I'm not reinventing the wheel here. So any experienced traders, you know these styles already, but let me go over that. And let me hopefully, even if you don't, or even if you do, you might suddenly go, actually, maybe that's better. Maybe I'll look into that style. So the different styles of trading includes the likes of day trading, scalping, swing trading, and position trading. There's more, but for the sake of this class today, I'm just going to talk about these four. Now, these four all have their slightly different or very different characteristics, so to speak. And I'll go into a lot more detail, and then we'll break it down, and I want you to ask yourself questions after I've gone through it and see what you think. Now, position trading is long-term trading, okay? And basically, position traders, they hold their positions for as long as months or maybe even years. Swing trading is short to medium term, okay? And they hold their positions from days to weeks. Day trading is short term. And here's a hint, it's in the name. It's for a day only, and it's not held overnight. And scalp trading is extremely very short trading, seconds to minutes, with no overnight positions. Let's break these down in a little bit more detail. Now, day trading, or day traders, do exactly basically what it says on the tin. It says it in the name, okay? For that, day traders do not hold their positions overnight. They close it in a single day. Day traders take enough time to analyze the market for the day, and they're in a position to able watch their positions, to keep an eye on their positions. Now, the key factors of a day trader, and again, this is what you need to ask yourself to see if this fits in with you, okay? Day trading could be for you if you can do the following. You're disciplined enough to close the trade by the end of the day, no matter the sort of negative or positive the balance of that trade is. You have enough time to analyze the market, and you can take into account the fundamental aspect of the day, key support and resistance levels, news going on, what the financial calendar has in store, and at that time, market sentiment. Day trading might not be for you if you do not have enough time to do a complete analysis of the markets and to watch your position. And if you're like, for example, in a full-time occupation, which of course could prove a major distraction. Now, one of some of the biggest mistakes I've had with people, certainly when I was back in the portfolio management days, is people were opening positions and trading during their times of work, and they couldn't focus. They didn't have attention. Of course, it dealt with their work life as well. Unless you are a full-time trader, this is not your job. This is your part-time thing you're doing, okay? So, you know, again, it's working into your lifestyle. Can this fit into your lifestyle and fit in? And have you got enough time to put in your analysis to do this? That's the question you can ask yourself if this trading style fits you and suits your needs. Scalping is the total opposite, to be honest. Scalping involves opening and closing trades very, 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 very quickly, okay? Scalpers, what they literally do is they open their trades for a few seconds or maybe a few minutes, okay? They literally snatch at that profit, taking small profits during times when the market is extremely volatile, okay? The idea is they open not just take these small profits, but they're opening, closing lots of trades, snatch, taking these these profits with the idea that when they finish scalping, when they finish their session, they build up reasonable more profits than obviously their losses. Now, to be a scalper, traders need to be extremely focused on charts and be quick thinking. Okay, and like I say, you need to really have the following to really fit in to be a scalper. If you can do the following, potentially scalping could be for you. Okay, first of all, you enjoy the excitement of trading, of fast trading, should I say. You get the thrill of the fast trading environment. You are very, 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 very much chart based. That means you are bordering on almost obsessed with charts. You are impatient, as in you want to take that profit here and then. You don't want to hold on to it. You're impatient. And you have fast reactions. And you are not fixed upon a set direction of the market, i.e., you're not fixed to an opinion that, say, as an example, the euro is going up today. You're not obsessed with that. You're open to all the other things about it. You're not actually even thinking about that. You're just looking the moment to get in, get out, get in, get out. So you're not transfixed by a set direction. Scalping is not for you, is if you're emotional and you're easily stressed. As in, if it becomes overwhelming, going in and in out the market is just too much, and you can't handle it. This is not for you. At the same time, if you cannot commit hours or focus attention on your charts, as in some scalpers, they will maybe scalp for maybe 2 hours a day, or maybe an hour a day, or whatever. And if you can't commit to those 2 hours where you are committed to sitting in front of your trading platform looking at charts, scalping is not for you. Plus, scalping is not for you if you prefer higher profits and small number of trades, i.e., you're not looking to take the $2, $5 profit. You're looking with lots of trades. Instead, you're looking for more of a bigger slightly profit, but smaller trades. Again, this type of trading is not for you. And if you look at the overall picture of the market, as in if you've spent the time reading the fundamentals, intrinsic value, of an asset, and if you spent the time, if you're more into that, thinking about that market sentiment, bullish, bearish, instead of looking for price action where you can scalp, this again, style of trading is not for you. Swing trading. Now, swing trading is again more long-term, and this requires a trader to hold a position sometimes for several days, maybe even weeks. Swing traders need to be able to identify shifts in direction within a medium-term trend. That sounds nice, James, but what does that mean? Basically, they're able to identify or enter the market when they believe the trade they're going in has a high probability of being successful. So they have the discipline to see there is a possible, potentially successful. So they need the confidence in themselves to do that. For example, if the market is on an uptrend, they need to have the eye, okay, to identify if the market's on an uptrend, when to enter the market at what's called a swing low. Okay, so they need the talent and the skill to be able to see this. At the same time, if the market's in a downtrend, they need to have the eye and the ability to see the swing high, to enter then to capture the downtrend. Okay, so this is really what a swing trader does. He has that eye, or she has that eye, to see that when it's on an uptrend, where the swing is to enter on the low, and when it's down a downtrend, where the swing is to enter at the high. Okay, again, this does require patience. So, with this as well, because you have to wait for the market to go in your favor, swing traders' positions again are held for longer, which also means there is a lot. Larger stop losses might also be required. Okay, so again, this is also about the capital. Now, key factors of a swing trader, easy for me to say, isn't it? Swing trading could be for you if there's the following. Could be for you if there's the following. You're comfortable to hold your positions for several days. You're comfortable to keep your position open. you are disciplined enough to only open a few trades with set parameters, as in, i.e., you have a set stop loss already and a set take profit, and you'll know your plan. You know where your goals are. Oops. Trust me to prick the one button just so I get in the flow of things. Excuse me. Let's try again. There we go. Technology, it's fun, isn't it? Yeah, so you're disciplined enough to only open a few trades with set stop losses and take profits, which means your risk management must include stop losses. So again, you have a very disciplined, like you should do in all trading, not just swing trading, but in all trading, really, your risk management is key. But your risk management does include larger stop losses. And like I said, the individual involved who trades this way must be patient and must always be calm. Now, swing trading might not be for you if, A, for one, you get the thrill and you like the excitement of fast-moving markets, because you have to hold your positions for days. Okay, so you're not watching your charts constantly and trying to react. You're watching it for days. So, you know, if you like the excitement of fast-moving markets, this type of trading is not necessary for you. If you're impatient, like I say, again, you have to be patient and calm. If you're impatient, then this style of trading might not be for you. You don't remain calm when you have a position in the market, as in you're constantly checking it and stressing about it, and constantly stressing when it's in a loss. Okay, Fred, that's a good question. I will come to that. That's a good question, Fred. And the final point, thank you, Fred. I will come to that question. I like that. The final question is, you can't spend the time to analyze the market every day. Again, you haven't put the time in, because like I said, with swing trading, the ability to know where the swing high is or the swing low is part of the ability of being a trader or a swing trader. So you need to be able to identify this. Finally, position trading. Position trading is when positions are held for very long periods of time, maybe months, and even in some cases, years. Position traders are for very patient traders who've had a complete, and these individuals have a complete understanding of fundamental analysis, because they use fundamental analysis to look for the actual intrinsic value of the asset. So in that case, they have a belief on where that asset's value will eventually go over time. As positions are kept open for a long period of time, like I say, fundamental analysis is the key factor, as, like I say, the intrinsic value is key here. Stop losses are, again, very large, as a position trader must be very calm and focus on the end game, as there will be times when the position for many, many days, or maybe weeks or months, is going to be in a negative. So again, he or she must be extremely patient and focused on the overall end game of the trade. Now, position trading could be for you if you have your own mind, you have your own opinion, you've done your own analysis, you've got your own vision of where something's going to go, and you can ignore all the other opinions other people are saying. You have a great understanding of fundamental analysis. So yes, you're able to take that fundamental analysis on, and in your own mind's eye, work out what you believe the intrinsic value of an asset is going to be. You can remain calm even when your position is in a negative, and you're extremely patient and focused on the end game. Position trading is not for you. Is A, for one, you cannot block out other people's opinions, market opinions, and you cannot block out market noise, i.e. you've got the charts race, you're excited by the candlestick patterns, the breaking news, breaking that, and you can't block that off and just focus on what you think or what your belief is. If you can't do that, position trading is not for you. If you're not a believer in fundamental analysis, and there is many people out there who are not, this is, again, possibly not the trading style for you. And if you're impatient, because you have to be patient, there you go, not for you. And again, with position traders, because you're holding over long term, so in some cases you're talking swaps, in some cases you're talking larger stop losses, it's all about the capital you have in your account at the same time. Okay, so if you need to have a reasonable amount of capital in your account to be able to be a position trader. And if you panic easily when a position is in a negative, then again, this type of trading is not really for you. And again, if you're in for the thrill and excitement of the market, because you're holding it for days and maybe weeks, months, years, again, this is the sort of thing which isn't really for you. Right. What I would say with that, take that away, and the only way you can work out if it fits, what trading style possibly fits with you, is you ask yourself that question. The questions we've gone over, ask that about you. I can't tell you. I'm not here to give you the holy grail or the secret answer, because there isn't one. Take that away and have a think about yourself and your lifestyle, and you try and have a think what type of trading possibly fits your needs and your lifestyle. Right, up and coming events for the rest of the month. The next episodes of how I did this, or how I came to terms. 20th of November, I've had a request by some of the other viewers who've seen my other webinars, and I will ask about this at the end. They've written to me and they said, how can I understand WTI, oil, and Brent? So I'm going to do a case study on how I came to understand trading, obviously WTI oil, and how I came to understand Brent. Then on the 27th of November, I have another episode called How I Came to Understand Correlations and Hedging. Then, of course, I'll be releasing the December schedule. Now, if you wish to reach out to me or speak to me, of course, I will have a question and answer session in a little while, but if there's any questions you forget, I wish I asked James that, please feel free to email me at james@strattonmarkets.com. Or you have any feedback or any ideas, or maybe something else you'd like me to cover, please feel free to email me at james@stratton.com. Or if you like, if you're a Twittette, I don't know what they call them. I'm not a social media person, but anyway, I do have a Twitter account, which is @jtruscothic, which of course, by all means, you can direct message me on it. I do give sort of not insights or advice or anything like that, because I'm not allowed to, obviously, but I do highlight certain things coming up in the market which might be worth keeping an eye on, or something which is breaking. As well as that, I do it in a quite comical fashion because it fits my personality. But by all means, follow me on my Twitter account at @jtruscothic, or by all means, direct message me on my handle there. Now, let me take myself off screen for a second so we can read the disclaimer in full. Before we get to the question and answer session, do not forget, of course, tonight, we'll be talking like online and CFD trading. Okay, and like with any or all types of investments, it does indeed carry a great deal of risk. So I do suggest you do your own research and your own due diligence, and know the risks at hand, and know if this indeed is something for you before entering any trade. Now, let's go back and let's go on to any questions. I've got 2 questions here already, which I will answer now. I'm going to put myself back on camera. There we go. You hear me okay? Good. Right. Okay. Can you recommend me a Forex educational training or class? And how many did you follow yourself? Very good question. Okay. Now, look, I don't think there's any one particular course education program I can recommend. There are very good educators in the industry, which I can suggest know their stuff and have actually a long history of trading. Some of these, they do charge a lot of money for their courses. And like I say, a lot of times what they're able to do is because of their personality. It might not fit for you, so the money you spend on that is not. What I would suggest is probably make sure you have a firm understanding of what you're getting involved in. There's plenty of online courses and things like that available, like these webinars. Attend these webinars because I try and say it how it is. What I would try and avoid is any educators or any things out there out on the World Wide Web who say, this is how I made $1,000 in one day, or this is how I now working from home and I've got a Lamborghini and Ferrari. Avoid those like the plague, because but the best thing, like I say, there's a brilliant website. Websites like Investopedia are really good for information as well. Very good. Obviously, Baby Pips is great. What I would also suggest is please try and take the time, which so many people don't do, is actually understand the mechanics of what the CFDs and Forex actually is. Nobody actually spends the time working out what these assets are. They go straight away trying to find Bollinger Bands and understand that, which of course you need to understand at some point. But take the time out to actually understand what Forex is and the risks involved. And by all means, attend other webinars like this, because I try and say it how it is. How many did I follow myself? Well, look, I'll be fair, I've always had a good understanding of the financial markets and the financial industry, because I was, like I said, I was in it from the age of 18. When it came to trading, etc., I started off really as a baptism of fire, because I was working for a trading company. I had a good understanding of the financial economics of something from obviously my studies and from my previous experience. I went in. Then after that, I would spend a lot of time with other traders and got their knowledge and their wisdom. And that's how I understood myself and got the understanding. I also went online and read a lot of books and things like that. I taught myself, and the only way I really managed to learn is by doing it as well. Like I say, I hold my hands. I made a lot of mistakes as well, and I've learned from them. So that's how I did it. There is that's actually one thing, but there is one trading course, it's the Online Trading Academy. They have places around the world. They're sometimes maybe worth checking into, but they're very expensive as well. But they can be quite good. But like I say, the only way really, again, is understanding yourself, getting a little bit of experience and taking your time and really identifying if this is for you, because this is not for everybody. Fred has a very good question. I have a small account and I like the idea of swing trading, maybe 2 trades per week. I also have time sometimes to day trade. Which is the best way to build a small account? Okay, well, first of all, like I say, we went over day trading and we went over swing trading. So it's identify what are those characteristics really fits in with your lifestyle, Fred. Again, it really finds out what fits for you. I can't tell you that day trade is the best thing for you or swing trading is the best thing for you, because I don't know you, unfortunately. What I will suggest, though, is really identify what you can do and what time you can put aside. And like I say, if you are got a small account with swing trading, because you do need a bigger stop loss, what I would suggest, though, when you're doing those sort of trades, okay, make sure you are trading small contract sizes, okay? Very small contract sizes, because if you're swing trading, you have to stay in the market for longer. Okay. And also make sure at the same time, if you're swing trading, you've got, because, you've got a little bit of insight of maybe you can spot the swing highs and swing lows, and that could potentially help you as well. Okay. So make sure you've got that understanding. But really, Fred, take your time. Okay. Do not rush in it. Trading is a marathon. It's not a sprint. Okay, no, my absolute pleasure. I'm glad you like that answer. And I hope you enjoyed it. So and I look forward to seeing you next week. And thank you for your questions. Guys, I really do love, by the way, I love interaction. I love people ask me questions, because it's just me talking all night and it gets a little bit lonely. So it's nice to actually hear some interaction. But no, thank you. Right, what's your opinion about managed trading found? You talking about managed accounts? Is that your question? Is that your question about managed? Is that about managed accounts? This is Mr. Tamas. Okay, I've got 2. I've got Wisdom here. Right. Yes, so it's about managed accounts. Look, some managed accounts by some brokerages who are reputable and have a good trading history can be. Can potentially be successful. But here's the thing, okay, here's the question I will say. You need to really do the research on the broker, okay? Make sure they have a track record and a speciality in this field, okay? And they maybe have some form of track record they can show you. Now, obviously, as we all know in this industry, previous results doesn't mean that future results are going to be the same. That's not the case. But like I say, if you want to go down the line of managed accounts, you really need to check into that broker and the individual involved, see what their style is as well, and all this jazz. You need to do your real research into these people, because there is a number of very good reputable firms out there, which I know other, I do have a track history there, which are quite good. But there is also, in this day and age, I'm afraid, the nature of the industry is there is also a number of firms have gone out there and claim to be something and claim to do something, and they don't provide that. At the same time, I would always ask if someone's going to be doing a managed account. Again, this is just opinions, not advice. The real, what I suggest is do your own research and due diligence on that broker and what they can do. Do that, okay? But I sometimes think if someone's promising, like if I got somebody to phone again, this is just opinion. I can't give you advice, obviously, so you need to find your own way. But someone phones me up promising me 80% returns in 1 week, I wouldn't personally take that on. It has to be, small and steady wins the race. But like I say, again, you need to really do your research on this broker and have see if they've got a track record. Can I provide you a list of reputable firms in managed accounts? I'd love to be able to do that, Wisdom. I really would. But like I say, I can't, because if I was to do that, that would be almost like a recommendation and advice, and that's I won't be allowed. I'm not allowed to do that. But do if you're looking at that, there's a few out there. Do your research, see how long they've been in industry for, see their history, see what they're regulated by, who they answer to as well. That gives you a good thing. Okay, that's what I can say. Do you recommend one strategy that helps? I tend to use slow stochastics with 2 moving averages, and the trade needs to be below the SMA and oversold in order to consider a trade. Okay, this is interesting. So, Jason, it's okay. I come to that question. My pleasure, Jason. Thank you for attending. Answer Fred's question first. Oh, by the way, Jason, the weather in Cyprus, it's cold. It's not freezing. It's cold. I find it cold because I've lived here for so long. It had a bit of rain. It's still, compared to wherever you are in the UK, I'm guessing UK or wherever you are, it's probably still warm, but it's okay. Answer Fred's question again. Do you recommend one strat? Oh, oops, what have I done here? Technology. Sorry. What have I done? Sorry, guys. Sorry, ladies and gents. Right, so do you recommend one strategy that helps? I tend to use the slow stochastics with 2 moving averages, and the trade needs to be below the SMA, and oversold orders to consider a trade. Right, okay, so okay, again, I don't know what time frame or what time you use the SMA, Fred. Okay, so you look for when the asset is below the SMA and it's oversold. Okay, then what do? You go long? Because obviously the theory is behind those indicators is really that if it's below the SMA, potentially the asset's on a downtrend, and if the stochastics is showing it oversold, then the theory is behind it, the market might start buying in again. Okay, so again, it depends on how you're using that theory, but that again, it's theory, because technical analysis is theory. It works sometimes, but it doesn't always work. If it always works, we'd be multi-millionaires. But I tell you what, Fred, please email me if you want more details on that. I'm happy to have a chat with you about it. I'll give you my email address. There's my email address and obviously my Twitter, etc. But like I say, come along for another ones, because I might do one on SMA thingies and stochastics. And Jason, thank you so much for attending. I hope you enjoyed it. Like I say, the weather is a bit cold, a bit rainy, but it's only because I'm used to living here. Hamdi, sorry. Hi, what must I do as a new trader? Thank you. Okay, new trader, first of all, take your time. Okay, understand what you are trading. For example, if you're trading currencies, understand what a pip is, understand how leverage is, understand the mechanics of that asset. Same with stocks and everything else where it's leveraged. Understand the risks involved. Understand if it fits your lifestyle and what you're looking to do and your personality, and take your time to understand bits and pieces. Do some test trades and find your footing. What you do not do is rush in. And what you do not do is you look for the secret answer, because there isn't one. Okay. Traders go through, or successful traders go through 5 stages. Okay. Unconscious incompetence, conscious incompetence. They then have the awakening moment, They then move on. If they're lucky, a lot of people don't get past unconscious competence or the awakening moment. If you're lucky to get past that, then you move on into unconscious competence and finally conscious competence. So it's a journey, my friend. It's not something to do straight away. But what to start off with, learn what it is, understand the mechanics of that, of the asset, and understand a bit about why certain things happen, why fundamental analysis technically moves the market, why does economic data matter, and get sort of used to that, but take your time and understand risk management massively. It's a lot to take on, man. This is a big thing, but step by step. Any other question at all? Any other questions? Anybody else like to ask me? Okay, did everybody at least enjoy it or find it insightful, find it interesting? I do have a particular style and manner of how I do things. I hope it wasn't too overbearing for some. Everybody enjoy it okay? Yeah? Yeah? Okay, I have a quick question to the room. Okay, I say this to every episode, obviously because I write them, a couple of days before I actually present them. But I'm always open to topics and ideas. So if there's any topics or any ideas anybody would like to maybe like me to cover or discuss or do something on, please feel free to let me know, email me or contact me and say, James, could you do something on, for example, moving average crossovers? Or James, could you do a case study on, I don't know, silver, for example? Or James, could you do something on risk management and price action, for example? Please feel free to contact me and email me and let me know if there's any areas in particular you'd like me to take the time out and do a little piece on. Don't hesitate and just let me know. Okay, if there is no other questions or there's nothing else I can help anybody else with, can I just say a massive thank you to everybody tonight who came along and attended tonight. Special shout out to Cyanoid, I think it's pronounced it. Apologies, I'm terrible with names. Special thank out to you, sir. Special shout out to Frank, Mr. Tanas, Wazim, and Jason, and Fred again, and Wazim again. Big shout out to all you fine people for asking great questions. Like I said, I love the interaction. I like the questions because otherwise I'm all on my own. So on that note, thank you so much. Please feel free to rate the webinar at the end and share feedback if you didn't like it or if areas you want me to improve on, like contact me. Like I say, till next time, and don't forget there'll be a new episode. I will send you a schedule out soon. Till next time, can I wish, depending where you are around the world, either a very good morning or a good afternoon or a good evening or even a good night, depending on where you are around the world. Till next time, every single one of you, trade